Good morning, sir.
Good morning, students. Dear students, today we learn how to write the journal entries in financial accounting. So, we know journal entries will be written based on the golden rules of accounting. So, in accounting, there are the golden rules. So, while writing the journal entries, we should follow these golden rules. So, here in accounting, there are three types of accounts. So personal account, real account, nominal account. So these are the rules that are applied in personal account. So debit the receiver. So whoever getting the benefit, so his account should be, receiver means the person who is getting the benefit. So his account should be debited. So the giver account should be credited. Whoever giving the benefit, his account should be credited. So that is the rule in personal account. Debit the receiver, credit the giver. So in real account, so this is the rule. So real account deals with the assets. So here debit what comes in. So whatever the assets are coming in, that should be debited. In the same way, whatever the assets going out from the company, that should be credited. So what goes out, that should be credited. So the third one is nominal accounting. So in nominal accounting, so debit all expenses and losses. So whatever the expenses are there for the company, whatever the losses are there for the company, that should be debited. In the same way, whatever the incomes company is getting and whatever the gains company is getting, those should be credited. So these are the golden rules of accounting. So there are the three types of accounts. So every account will follow some rules. Those rules we should follow while we are writing the journal entries. So these are the various transactions are given. So for these transactions, today we write the journal entries. So here, the first transaction is in the year 2001, there are some transactions that are taken place. So for these transactions, we write the journal entries. So the first transaction here is Ramesh commenced the business with rupees 50,000. Here, Ramesh is commencing a business. So Ramesh is starting a business with rupees 50,000. So let us suppose he is starting Ramesh Enterprises. Ramesh Enterprises. So how much amount he is investing? He is investing 50,000. So he is starting with 50,000. Here, when the organization is established, so the organization should be treated separately from the person who is starting that organization. So he is starting, let us suppose he is starting the Ramesh Enterprises, then Ramesh Enterprises that must be treated separately from the person Ramesh. So Ramesh may be the owner to the organization, but here the Ramesh Enterprises, the organization and the person, they must be treated separately as per the business entity concept. So there are various concepts in accounting. So as per the first concept, business entity concept, so the organization and the person who is starting the organization, they must be treated separately. So let us suppose, so whatever the money he is investing, for that investment, the person should be treated as a creditor. Whatever the money he is investing, so for that money he should be treated as a creditor. He is investing 50,000 in the organization, in the company. So here the organization is getting the 50,000. Organization is getting the 50,000. Here he is starting the business with 50,000 means here 50,000 is the cash. 50,000 is the cash. So cash is a asset. Cash is a asset. So as it is a asset, so it will come under the real account. So as per the real account, whatever coming in to the organization, that should be debited. Here Ramesh is investing 50,000 means, so here organization is getting 50,000. So here organization is getting 50,000 means 50,000 is coming into the business. So as per the real account, so the whatever comes in, that should be debited. Here this is the format of journal entries. So First will be the date column, particulars column, LF number, debit amount and credit amount. So this is the format. So here ledger folio means when this column will be helpful when we are preparing the journal and ledger simultaneously. But here we ignore this column as we are preparing only the journal entries for this sum. Okay, see, the first transaction is Ramesh commenced business with rupees 50,000. Here in the date column, first we should enter the year 2021, January 1st. So Ramesh is starting with the business with the rupees 50,000. Let us suppose he is establishing an enterprise, he is investing 50,000. Here, enterprise is getting the cash 50,000. So cash is an asset, so that should be debited. So cash account debited to, cash account debited to. So here Ramesh is giving the money. He may be the owner, but he is providing cash to the enterprise. So for this amount, he should be treated as a creditor. He is the giver, benefit giver. So as per the personal account, as he is giving the benefit, so giver account should be credited. So Ramesh capital account, Ramesh capital account. So the how he is investing 50,000. So 50,000 credit. In the credit transaction also we should write 50,000. So for this entry we should write the narration also. Being a business is started with rupees 50,000 by Ramesh. So while writing the journal entries, so here the debit and credit aspects that need not be from the same account. So while writing the journal entries, debit aspect will be from one account, credit aspect will be from another account. So that thing also we should notice here. Here debit aspect we are getting from the real account, but credit aspect we are getting from the personal account. So the real those two aspects, debit aspect and the credit aspect, that need not be from the same account. So we will get from the different accounts. So that is also we should notice here. Here company is getting the cash, so cash is coming in, that should be debited. So who is providing that cash? Ramesh is providing. So he should be treated as a creditor, though he is a owner, as he is giving benefit to the company. So that benefit giver as per the personal account, so his account should be credited. So that is the first entry for the first transaction. Ramesh commenced business with rupees 50,000. Here organization is getting the cash from the Ramesh. As the cash is coming in as per the real account, that should be debited, and the benefit is given by the Ramesh. So as per the personal account, so the giver account should be credited. So that is the entry, and the narration also we should write for the journal entries. So being a business is started with rupees 50,000 by Ramesh. So that is the first entry. Here we go to the next entry. So the next one is deposited into bank. So here organization is depositing some amount in the bank. In this case, the depositing the money into the bank means cash is going out. So cash is going out. So cash is an asset. When the cash is going out, so as per the real account, that should be credited. So cash is going out, that should be credited, and that is the credit aspect. Here debit aspect will be the bank. Bank will be the receiver. Here personal account deals with the persons. So here bank is an artificial person. So bank should be treated as a artificial person. Here bank is receiving the benefit. We are depositing cash into the bank means bank will be receiving the cash. So bank is the benefit receiver, and also here the cash is going out from the company. So as per those two rules, we should here deposited into the bank means bank is getting the benefit. So bank account should be debited as per the personal account. Bank account debited to cash account. Cash is going out as per the real account. So date January 2nd. So in the date column, we should enter the date and we should give the posting. Here, bank account we are debiting as per the personal account, as the bank is getting the benefit. So debit the receiver. So as per the real account, so cash is going out from the organization. So here an organization is depositing some cash into the bank. Cash is going out. So as per the real account, so the cash account should be credited. For this transaction, so the amount we should enter. So amount is 40,000. 40,000. So we should write the narration also for this transaction, being cash is deposited into the bank. So that is the second entry we did. So here we should notice that one aspect we are getting from personal account, debit aspect we are getting from personal account, so credit aspect we are getting from real account. So from where we are getting the debit aspect, from where we are getting the credit aspect, that thing we have to notice very carefully while writing the journal entries. So the third one is purchase goods for rupees 10,000. So on January 3rd, here organization is purchasing some goods for rupees 10,000. Here always purchases have the expenses to the organization. Organization is buying some purchases means that is an expense to the organization. So as it is expense, as per the nominal account, so expenses should be debited. Expenses should be debited as per the nominal account. So always purchases we should write on the debit side, purchases. That is the debit aspect, purchases account debited. As it is a expenditure as per the nominal account, so we should write the debit transaction, and we should write on the debit side. The amount is, so here purchase goods for rupees 10,000. So here when the organization is buying the goods means the cash will go out. We purchase the goods by paying the cash. So we are buying the goods means the cash will go out. So cash should be credited, cash account. So 10,000. So here we are purchasing the goods means purchase is an expenditure to the organization. So as per the nominal account we write the debit aspect, but when we are purchasing means the cash will go out. Definitely we are buying the goods means we have to pay the cash. Cash will go out from the organization. So as per the real account, so the cash account should be credited. So after that we should write the narration, being goods are purchased. Being goods are purchased. Sorry. So like that we should enter the purchase transaction, purchase goods for rupees 10,000. Next is transaction is sold goods for rupees 20,000 to Krishna. Here organization is selling goods to one customer Krishna for 20,000. So organization is selling means so organization will get the cash. So purchase is always a expenditure. Purchase transaction is an expenditure to the company, but when the sales are income to the organization. When the organization is selling goods means organization will get the cash. So here sales are income to the organization. So as it is a income, as per the nominal account, sales should be credited. So when it is selling, organization is selling goods to Krishna means here in the transaction when the name is given, we should treat that is a credit transaction. The transaction should be treated as a credit transaction. That means we are selling goods to Krishna, but Krishna is not paying the amount at that time. Krishna is not paying the amount, he will pay the later. So when the customer is to pay later means that is a credit transaction. So here 7, date is 7. So we are selling goods to Krishna. When he is giving, we are getting the cash means. So when we are selling the goods means we will get the cash. When the cash is getting, the cash account should be debited as per the real account. So cash will be coming in. But here the name is given in the transaction. When the name is given in the transaction means, so we are not getting the cash. When we are not getting the cash means Krishna account, the person account should be debited. So Krishna account debited to sales for rupees 20,000. Being goods are sold to Krishna on credit. So that is the entry to the sales transaction here. On the 7th, organization is selling goods to Krishna. So sales is a income to the organization. Why? Because organization is selling goods means organization will get the income. So as per the nominal account, so the sales account should be credited. Sales account should be credited. So always sales is a credit aspect to the organization. When we are selling the goods, we will get the income. So sales account should be credited. So when we are selling the goods, if we are getting the cash, so cash should be debited. But here in the transaction, it is given we are selling the goods to Krishna. Here name is mentioned in the transaction means he is not paying the cash, so his name should be entered. So we are entering on the debit side the name of the person Krishna. So that is the entry for the purchase, that is entry for the sales transaction. So we go to next transaction. So that is on 9. So on 9 we are purchasing goods from Manish for rupees 5,000. Here it is also a purchase transaction. So as we said earlier, so purchase is an expenditure to the organization. We are purchasing something means we have to pay the cash. So that is an expenditure to the organization. So purchases always we should write on the debit side. So on January 9, so it is a purchase transaction. So purchases account debited. So this is a purchase transaction. We are purchasing goods means that is an expenditure to the organization. So as per the nominal account, expenses should be debited. So from the monies, here also the name is given in the transaction. Name is given in the transaction means when the name is given, so we should treat that it is a credit transaction. That means we are buying the goods, we are not paying the cash at the time. So we will pay the cash in later time. So this should be treated as a credit transaction. So when the name is given, so that in the credit aspect we should mention the name of the person, Manish account. So the amount will be 5,000. So we should write the narration. Being goods purchased from Manish on credit. So here purchase goods from Manish. So purchase is an expenditure. So as per the nominal account, expenses should be debited. So when we are purchasing goods means, so the cash will go from us. But here we are not paying the cash. As the name is given in the transaction, we should assume that this is a credit transaction. So in credit side, so we should enter the name of the person. So that is the entry for this transaction. Next we go to next transaction, that is sold goods for cash for silage for rupees 4,000. So again it is a sales transaction. So we are selling goods. So organization is selling goods means organization will get the cash. So sales is a income to the organization. So as per the nominal account, so sales should be credited. Sales should be credited. Then when we are selling the goods means we will get the cash. So here he said that we are selling the goods for cash. In the transaction, when the cash is mentioned, here the name is also given. Name is also given. So in the transaction, when the cash is mentioned, then this will be the cash transaction. This will be the cash transaction. That means we are selling the goods, we are getting the cash. So whatever the cash is coming in, so cash is a asset. As per the real account, what comes in, that should be debited. So here on 10, company is selling goods, company is getting the cash. So cash account debited to sales. So amount 4,000. So we should write the narration. Being goods sold to silage for cash for rupees 4,000. So here we are selling goods to silage. So sales is a income to the organization. Why? Because when the organization is selling goods means it will get the cash. So as per the nominal account, so sales should be credited. And here in the transaction it is mentioned it is a cash transaction. So when the cash is mentioned in the transaction, then we should ignore the name. We should ignore the name. So we need not consider the name. So we should write cash account to sales account. So that is the entry for this transaction. Next we go to next transaction. Here again, company is purchasing machinery for rupees 20,000 paid through check. So here company is purchasing the machinery. Here company is purchasing the machinery, not the goods. So goods are the regular business item. So when the goods are purchased, we should treat it as expenditure. We should treat it as expenditure. So purchases we will debit the purchases. So here we are buying the machinery. So machinery is also buying the machinery is also an expenditure to the company. But here, so when the machinery is purchased, company is getting an asset. Company is getting an asset. So when the company is getting an asset, as per the real account, so whatever coming in, whatever the assets are coming in, that should be debited. So as the company is getting the machinery, so machinery account should be debited. So machinery account debited to. So company is buying the machinery, so machinery will come out. Then company is paying through the check. Company is paying through the check. As the amount is paid through the check, so our bank will pay the money. Bank will be the giver. Bank will pay the money. So the bank account here, bank account should be credited. Bank account. So bank will be the giver as per the personal account. So amount will be 20,000. So being a machinery is purchased and paid through check. So here in this transaction we should remember that when the assets are purchased, asset account should be debited. As per the real account, when we are purchasing the assets means assets will come in. So those asset with the asset name we should debit. We are buying the machinery means machinery account should be debited, and we are paying through the check. As we are paying through the check, so bank account should be credited. Why? Because bank will pay the money. Bank will be the giver. So as per the personal account, bank account should be credited. So then next we go to next transaction. Here interest received from Ashok. Interest is receiving. So here organization is receiving some interest from the Ashok. So organization is getting interest means generally interest we will get in the form of cash only. So interest received is a income to the organization. Interest will be received in the form of cash only, and interest received is a income to the organization. So as per the nominal account, so as it is a income should be credited. So company here interest is received means company will get the cash. So here cash company is getting. So as per the real account, so whatever the asset is coming in, so here cash is getting. So whatever the asset is coming in, that should be debited. So on 16, the transaction is cash account debited to interest received, being amount is cash interest received from Ashok rupees 500. So being interest received from Ashok. Here organization is getting interest. So getting interest means that is an income to the organization, and also interest will be received in the form of cash only. So cash account should be debited to interest received. Here the name of the person we should ignore. So that is the transaction. That is the entry for the on the 16th day. Whatever the transaction is done. So cash account debited to interest received. Okay, next transaction. So that is on 18th, what is happening? Cash is withdrawn from the bank rupees 2000. Here organization is withdrawing cash from the bank. So when the organization is withdrawing cash means cash will come into the organization. So as per the real account, when the cash is asset, when it is coming into the organization, that should be debited. Then where organization will be getting the cash, and who will be giving the cash? So bank is the giver. So bank account should be credited. So on 18, what is happening? So cash is withdrawn from the bank. So the cash will come into the organization. So cash account debited. Cash will come into the organization. Who is providing that cash? Bank is the giver. So as per the personal account, so the giver account should be credited. So cash account debited to bank account. So rupees 2000. So being cash withdrawn from the bank. So here again we explain. So cash is withdrawn from the bank. So organization is withdrawing cash from the bank means cash will come into the organization. So as per the real account, when the cash is coming in, cash is asset, when it is coming in, that should be debited. And also cash is given by the bank. So as per the personal account, giver account should be credited. So bank account should be credited. So next we go to next transaction, that is cash received from Mahesh rupees 800 and discount allowed 100. So we are receiving some cash from Mahesh for rupees 800 and we are giving some discount rupees 100 rupees. Here discount allowed is a loss to the organization. So loss should be debited as per the nominal account. So discount allowed is a loss to the organization. When the organization is giving some discount means, so that is a loss to the organization. So as per the nominal account, so that should be debited. Here cash is received from the Mahesh. Company is getting some cash. So same as per the real account, when the cash is coming in, that should be debited. So on 20th, company is getting the cash account debited. When the cash is received, as per the real account, that should be debited. How much cash company is getting? 800 cash getting. And also here discount is a company is giving discount, organization is giving discount, whatever the discount is giving, so that is a loss to the organization, so that also should be debited. So discount account, discount allowed discount allowed account debited rupees 100. Here two debit aspects are there. And credit will be, so Mahesh account. So Mahesh is the giver, he is giving the money 900. So as per the personal account, the giver account should be credited. So being cash received from Mahesh and discount allowed to him. So again we explain here, company organization is getting some cash from the Mahesh. So cash is coming in as per the real account. Cash should be debited. Here organization is giving some discount to that person, 100 rupees. So discount allowed is a loss as per the nominal account. So discount allowed is a loss to the organization. When the organization is giving loss, discount means that is a loss to the organization. So that should also be debited. So actually Mahesh has to pay 900 to the organization. He should pay 900 to the organization, but he is paying only 800, and remaining company organization is losing. So that whatever the organization is losing, so that amount is a loss to the organization, that should be debited. So as per the nominal account, discount allowed is a loss, that should be debited. So cash is receiving as per the real account, whatever the cash is coming in, that should also be debited. Then who is giving the cash? So the Mahesh is the giver, his account should be credited as per the personal account. So here if you observe, so here two debit aspects are there, only one credit aspect is there. So if there are more than one aspect, one debit aspect, if there are any more than one debit aspect, then it will be called as a compound entry. In any entry, if there are more than one debit aspect or one credit aspect, so there may be two debit aspects, there may be two credit aspects. So when there are more than one debit aspect or credit aspects, then that entry will be called as a compound entry. So while we are writing compound entry, we should be very careful. So this is the way we should write the journal entries for all these transactions. So by following the golden rules of accounting. Okay. These are the transactions. In this way we should write the journal entries to the transactions. So this is one important topic. So all you should practice based on the real account, based on the golden rules, how to write the journal entries. So that should be practiced carefully. So